This is your LMAX exchange technical update for Friday, June 23rd, 2017. Euro dollar. So the euro has yet to break down below some key support on a short-term basis at 111.10. A break below that level would accelerate recent declines and open the door for a more significant correction down towards a measured move in the 109.25 area, but inability to take out 111.10 keeps the more immediate pressure on the top side, with room for a fresh run to 2017 highs, fresh 2017 highs, and towards the August 2016 peak at 113.67 further up. Sterling dollar. So cable has done a good job being very well supported on dips below previous range resistance at 127.75. Still, there's room for additional declines in this market into the 125 area before the market considers a more significant bullish resumption back towards a measured move extension over the coming weeks at 135. Only back below 123.60 here would delay the newly adopted constructive outlook for cable. Dollar yen. So despite recent gains in dollar yen, the market remains confined to a downtrend, and the market is expected now to be well capped ahead of what could be the next downside extension to retest the 2017 low back in April, just shy of 108. We would need to see at a minimum a break above 112.13 to alleviate immediate downside pressure, while a break back above 114.37 would be required to negate the bearish trend. Euro Swiss. So Euro Swiss is topped out ahead of 110, which is a critical psychological barrier, and while the market holds below 110, there's risk for a continuation of declines, initially back towards critical resistance right now, just ahead of 106. It would take a break above 110 to negate the bearish structure for Euro Swiss. Aussie dollar. So Aussie has been showing signs of stalling out after the market pushed above some resistance just over 76, but inability to establish above there has led to the latest minor pullback, which could though extend some more as the market overall continues to show signs of topping out in 2017, with risk for a retest soon back towards lows around the 73.30 area. Only a close above 76.11, that previous resistance point, would delay the more immediate bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has been consolidating off recent lows in the 132 area. A close below 132 would be a bearish development and open the door for deeper setbacks towards psychological barriers around 130, but inability to close below 132 will suggest that the market is wanting to base out around current levels in favor of a resumption of a broader uptrend back towards a retest of the 2017 high at 137.94. Kiwi dollar. So the New Zealand dollar has recently had a nice recovery since basing out by 2017 lows around 68.20, and this recovery is extended thus far up just above 73. There's some 2017 high which comes in at 73.76, and a lot of good resistance into this rally, though the market would need to see now a break back below 71.85 to put the pressure back on the downside and accelerate declines. SPX 500. The S&P 500 is on pace to test the 2480 level, which is a measured move extension over the coming days as it continues its run to fresh record highs. This 80-point extension follows that move that we'd seen to a record high at 2400 down to a pullback to 2320 earlier this year. That was an 80-point move, and so the breakout above 2400 has projected an 80-point move to the top side at 2480. A break back below 2400 would be required at a minimum to take the immediate pressure off the top side, while a break below 2320 would be required to suggest that the market could be seeing a significant structural shift. Gold. So gold has been very constructive over the past several months, putting in higher lows and higher highs, and so this latest round of setbacks could be setting up that next higher low in the 1230s in favor of a resumption of gains through the 2017 high around 1296 and towards the 2016 peak at 1375 further up. At this point, ultimately, though, only a break back below 1214, that low that we had seen back on the 9th of May, would compromise the constructive outlook for gold.